Managing losing trades. What to do when a trade goes against you. Now, are you worried about losing trades? You see, losses are part of our business as traders, and every trader needs to learn how to manage losing trades. Now, right now, I am in a losing position. I'm actually in a few losing positions, but one of them is really giving me a headache. So in this video, I will show you how I manage the trade. So let's get started. During these crazy markets in March and April, I have very successfully sold put options, as you might know. So that's how I made 43% of my account in just 5 weeks. Now, when selling put options, it's not a matter of if you will have a losing trade, it's about when it is going to happen. You see, I had 16 winning trades in a row and not a single losing trade. But right now, one of my trades is in trouble. So right now, I want to show you what I did, the trade that I entered, and how exactly I'm planning to manage this losing trade. So you see, the trade in question is a trade on Hertz. And let me show you exactly what it looks like. Here's Hertz. And a few days ago, right on this day, shortly before Hertz crashed down, I sold the 350 put for 35 cents. And I sold 25 of them. Because you see, for each put option, the broker deposited $35 into my account. And since I'm trading 25 options, that's a total of $875. Now, as long as Hertz stays above this blue line, which is $3.50, within the next 2 weeks, I can keep these $875. However, if Hertz will be below 350 on May 15th when the option expires, I have to buy 100 shares of Hertz at $3.50. And see, since I'm trading 25 options, that would be 2,500 shares. And as you can see, right now, as I'm recording it, Hertz is trading right at my strike price at 350. It's trading right now here at 351. Of course, that's not good. However, I will not get assigned yet. Why? Because the expiration of the option that I traded is May 15. So, as you can see, today is May 1st. So there's still enough time. However, you'll notice that the position is deep in the red. Let me bring up my trading account here. There you see it. Oh my gosh. Right now, this position is down $1,875. I sold this for 35 cents and I traded 25. That's what you see here. 25 options. And right now, this option is trading at $1.10. $1.10 over $1.15. So this means that right now I'm looking at a loss of $75 per option. And as I said, since I sold 25 options, that's a loss of $1,875, as you can see right here. Now, first of all, to me, that's not a big deal. After all, as you can see, this is a $35,000 account. So being down $1,800, $1,875, is a rather small amount for this account size. But let's talk about this situation. You see, here's what happened with Hertz, because Hertz just plummeted shortly after I entered this trade. This is right here when Hertz went all the way down. So what happened? Hertz missed a payment, and they have until Monday, May the 4th, which is 3 days from now, to negotiate with the creditors and come to an agreement. Now, if they cannot come to an agreement, they already said that they will probably file for bankruptcy next week. Now, from my perspective, the creditors would be stupid to force them into bankruptcy because Hertz collateral is cars. And right now, the used car market is in the trash can. I mean, we have a pandemic going on, right? Nobody is buying new cars, so there's no demand for new cars, and dealerships are selling their inventory to reduce inventory cost. So if the creditors take all of Hertz cars and do a fire sale, they probably only get pennies on the dollar. But hey, it's their decision, not mine. So here are the 2 possible scenarios that can happen on Monday. Scenario number 1, Hertz and the creditors come to an agreement and the stock price, boom, jumps up. Now, in this case, we can try to get out at break even or with a small loss, or hey, maybe even with a profit. Now, scenario 2, there's no agreement and Hertz files for bankruptcy next week. Now, obviously, this could send the stock lower, even though I believe the possibility of bankruptcy is already factored into the price right now. This is why it is trading at 350. However, these are the 2 scenarios. And these two scenarios leave us with three options. Option number one, we can get out of the trade right now and I would lose $75 per option traded. Now, for some traders who tend to panic and obsessing about a trade, this might be a good choice for them because then they can sleep again at night and don't have to worry about a trade. But hey, that's not me. I'm not the panicky kind of trader. Now, option number two, I can wait until we get the news on Monday or Tuesday about a possible settlement or what is happening here with the creditor. Now, our break even on this trade is a stock price of $3.15. And here's why. So the strike price is $3.50. And when we sold the option, we received a premium of 35 cents. This is what we got at this point. So this means we already received this. It's already in our account. And if we subtract the 35 cents from the 350, we arrive at 315. So as long as the price stays above 315, we should be good. You see, we have a buffer of 35 cents. So therefore, our real loss will be the difference between 315 and whatever price Hertz is trading on May 15. So example, let's say on May 15, Hertz is trading at $2.50. So in this case, we would lose, what is the difference here between 315 and 250? So we would lose 65 cents per option. Now, options come in 100 packs, as you know, and so this means that we are losing $65 per option. But you see, that is less than selling the option today for a $75 loss. This would be if we sell it today. So again, as long as it stays above 250 until May 15th, we are good. Now, before we move on, is this making sense thus far? Because if it is, do me a favor. Click on like so that I know that I'm not going too fast or too slow. So if you're enjoying this video thus far, click on like right now. So here are the main differences between selling today and waiting until next week. Number one, when selling today, I would realize a loss of $75 per option, right? I mean, we just talked about it. But it could be that I'm getting out at the worst price. This is why it is so important that I'm willing to buy the stock at the strike price that I sell the option for. And in my case, that is $3.50. Now, number two, when waiting until next week, there is a possibility that Hertz snaps back and I can get out at a smaller loss at break even, or maybe even with a profit. So you see, only if the stock is lower than $2.50 on May 15th, I would lose more than the $75, which is the loss that would happen when I liquidate it today. And here's why. I mean, we just talked about it, right? We know that our break-even point is $3.15. And if you would sell the option today, we lose $75 per option. So we need to subtract this from the $3.15. And this means we would lose the same amount if we sold today, or the stock is trading at $2.45 on May 15th, in 2 weeks from now. Even though there is a possibility that the stock might be lower than $2.50 on May 15th, I believe that there's also a possibility that the stock jumps up, even if it is only for 1 day. Could be based on rumors, could be based on some takeover news or whatever. However, if it jumps up just for 1 day, we can get out of the option at a better price than it is right now. So the key question is, which of these two scenarios is more likely? Scenario number one, is it more likely that the stock is now dropping to $2.40 or $2.50 and never trade above $2.50 again until May 15th? Or is it more likely, scenario number two, that the stock is jumping up based on some rumors regarding the rescue or takeover, and it just jumps up very quickly, as you can see here, maybe to the $4 level or maybe the $5 level, just up to here, okay? Because then we could get out at break even or maybe even at a profit. For me personally, option two, that we have this quick jump, is more likely. Now, as you can see, when selling options, it is absolutely important to have a plan and, most importantly, to stay calm. Because if you panic, you could close the position at the worst possible time and sit on a large loss. Now, if you want, I can keep you updated on the outcome on this trade. All you need to do is subscribe to this channel and hit the little bell, because this way YouTube sends you a notification whenever I go live or release a new video. So this way I can keep you posted on the update of the trade. Hey, and if you enjoyed this video, then you might also enjoy some of the other videos that are made, and simply click on one of the videos that appear on the screen right now, and I'll see you in the next video. Talk soon.